Before my recent interview on the Fox Business Channel, one of the topics that was discussed back and forth was the idea that a number of wealthy Americans were rushing to get their estate tax plans in line before Joe Biden got inaugurated. And that struck me as a little bit odd because, Joe Biden's not going to introduce a new tax on his second day in office. It's not just going to magically happen when he becomes the president. But I realized the rationale why people were doing this, and it speaks to a very nasty tax that I believe you'll see more of in the future. I'm going to tell you about it and how you can handle it. Hi, I'm Andrew Henderson here at Nomad Capitalist. I've spent over a dozen years curating a global network of experts from attorneys to accountants and more, building a team of over 30 people, all to help you, the 7- and 8-figure entrepreneur, legally go where you're treated best. You can learn more at nomadcapitalist.com. Now let's talk about this nasty tax. It's not a tax hike. Politicians in the U.S. and elsewhere want to raise taxes on income, raise taxes on corporations. It's not what it is. It is not a capital gains tax hike. Joe Biden has said he wants to do that, but we're not going to talk about that. It's not even a wealth tax, something that I've seen getting some of the biggest momentum in a number of Western countries and in some U.S. states as well. What it is a tax that I told Robert Kiyosaki when I was interviewed by him that I think you'll see a lot more of, and that is a retroactive tax. And so the reason that people in the Fox Business piece were talking about getting their estate plan in order pre-Joe Biden was the idea that he could potentially pass a law towards the end of his first year, 2021, that would subsume everything that happened in 2021. And so they wanted to get it done in 2020 under the current rules, so there was no way that they could say, hey, we're making this law on December 6th, but just assume it counts for all of 2021. This is something that I'm seeing more talk of and actually more action on in the U.S. and also around the world, where basically you're playing by the rules one day. The next day, a new law is passed and said, you know what? We changed the rules. So whatever you've been doing for the last 6 months, forget it. Now, if you've seen an example of this, leave a comment below, because I know that there are some examples in various states and probably in other countries that I'm not aware of. So leave a comment if you've seen something like this. But the idea that you can play by the rules and then the rules change ex post facto, to me, seems absolutely ridiculous. But it did happen 3 years ago on a national level in the United States with the Tax Cuts and Jobs Act. And this got very little press because most of the conversation around that was either, hey, companies are bringing their money back and that's going to be good and we're going to create jobs and corporations have lower taxes, or the millionaires and billionaires just got to tax cut those evil, nasty people. And what there wasn't talk about was the people in the offshore world. And I remember reading an article in the Wall Street Journal about 6 months after it happened, mid-2018, where they talked about all the people who lived in the UK and in Australia and in other countries where they were paying taxes on their businesses in those countries. But the Tax Cuts and Jobs Act, through the repatriation tax, was forcing them to cash money out of their company that they otherwise wouldn't do, that wouldn't make sense in their country. No British tax advisor would tell them to take money out in the way that was required. But they had to do it to send money to the United States for all of the retained earnings in their foreign corporation going back to 1986. So for a period of 31 years, up to 31 years, if they moved to the UK in 1986 and they started a business and they made money, and under the laws of the UK, where they were paying taxes, not exactly or Australia, right? Not exactly the lowest tax place on earth. They were paying money. They were living there. They were paying the taxes. And they had some retained earnings, because in those countries, you might not want to take all the money out. And they were living under the rules, the foreign earned income exclusion. They were following all the procedures for how you treat a foreign corporation owned by a U.S. citizen. Everything was done properly. And then with one stroke of the pen, everything they had done for 31 years, they went back and said, please, pay us 15.5% of that, or in some cases a little bit less, but usually 15.5%. Take it out of your company in that foreign country, incur a big penalty, pay all the tax there, and then send us what's left, 15.5%. And they did that for 31 years. And nobody said anything about it, because how many people are in that situation? You've got an estimated 9 million Americans who live overseas. Many of them have jobs, some of them highly paid, some of them, I guess, moderately paid, right? Some people are retired overseas. Not a lot of even the 9 million, which is a small number out of 330, have businesses. And then, of course, there are folks like Nomad Capitalists where it would affect you, but at least you weren't paying the tax. If your company's in the UAE, at least you're not doubly screwed. You're just paying the US rather than also the UAE or Cayman Islands or whatever. But the point is, they were able to go back and say for 31 years, you got to pay up. And they said, oh, well, we'll let you pay it in installments. And how nice and how easy it'll be. They changed the rules. So you were playing by the rules for 31 years. And I think what's most important there is the political will to stop it doesn't exist, because the other 321 million Americans aren't aware. I remember looking all over the place, like, is this discussed? Nobody was talking about it. Nobody was talking about these things. All they cared about was the corporate tax rates going down, because that's what plays well domestically. And so you had to be reading, these arcane tax journals that we use here at Nomad Capitalist, this really dry, boring reading to figure out what the heck was going on with all the new provisions in there. And there are new provisions for Americans that make your life a bit more difficult. But they could just go back and take your money. And who's going to stop them? Who's going to shed a tear for those folks? For a couple 100,000 American entrepreneurs who live overseas, who cares about them, right? I think that's what's going to happen with a lot of these taxes, especially as the political climate in Western countries becomes anti-business and anti-wealth. Look at what's been happening in California, where the government has talked first about a wealth tax. They did it in mid-2020. That stalled. Now they're back with a new proposal for a wealth tax. And what they're saying now is, even if you're not a California resident, they want to carve up your time and basically have a 10-year look back to where if you spend one summer in California and you trigger this new, wealth tax provision, for 10 years, they're going to go back and just keep, taxing part of your global wealth. And so basically something that you do 1 year can affect you for the next 9 years. Now, I have been described, not always in the nicest ways, as the goody two-shoes of the offshore business. And I don't agree with the tax rates in the US. I think the tax dollars are squandered. But okay, you're not going to get any kind of substantial tax reduction in the mainland United States. So if you choose to live there, if you choose to live in California, I guess you're, by default, you're agreeing to it, whether you like it or not. But to say that you left the country as much as 31 years ago, to say that you did everything before the deadline, to say that you never lived in California, and they're going to go back for however many years, I guess as many as they want, if they can do, 2 or 10 or 31, what's the difference, right? They can go back and they can undo everything that you've done. Even if what it was fully legal at the time, they could just change it. And so I think that this is one thing to watch out for. For me, when I decided to leave the US for good, it wasn't because my tax bill was too high and I finally got fed up. It was because not only did I personally never feel comfortable there, and I lived overseas long enough that I finally said, I don't need this identity anymore. That's a personal thing. We don't belabor that too much here because it's not something that affects you. But, I also said, all this stuff that they're doing, and some people have disagreed with me because there are many people who watch this who they like Donald Trump, and I'm not pro-Trump or anti-Trump, but I did say America First will be bad for people who are Americans who want to live overseas, because the goal of things like the tax plan was to bring Americans and their money back to the U.S. and say we're lowering the rates, but by the way, if you're offshore, you're getting screwed. And so I think that, if they can get away with that, that's the place that I just didn't want to be a part of. I just felt like, what's going to happen next? And again, it wasn't necessarily related to that particular tax. It was just, the idea that the country was becoming increasingly nationalistic and saying, whatever, we'll just do whatever we want. And if you're overseas, then, you're really not one of us. And I said, I don't want to stick around for what that's going to portend. And I've seen people who've suffered very badly under that, for example. And I told them, here's what I'm doing. Maybe you want to follow me. And they said, no, I'll be fine. And then it turned out 6 months later, they were doing terribly. They were paying a lot of money. And so I think that retroactive tax, definitely one that you want to watch out for. The government can change the rules. So make sure whatever government you are hitching your wagon to is one that you trust will honor its word. Make sure that you are in a country where you are, comfortable with them. And I've seen people who, they're Americans, they want to stay in the U.S., but they don't even want to get a second passport because they think, well, if I need it, I'll get it then. It may be too late to do something and start something later. So my suggestion is have your second residence, ideally have your second citizenship, have some assets overseas, potentially if some country, this is not only the US, by the way, the UK, Canada, Australia are talking about wealth taxes, other countries are talking about it. Potentially, some miracle they may only tax domestic assets, or potentially there may be some benefits that you can get by having some assets overseas, or by living overseas before they come and apply the tax. So I think the sooner you distance yourself from countries you don't trust to be honorable with tax, the better off you'll be. Second residence, second citizenship, offshore diversification help you do that. How can Nomad Capitalist help you? 4 ways. Number 1, subscribe to our channel and click the notification bell to make sure you get our new video every day. Number 2, get a copy of Nomad Capitalist, the book. You'll learn a lot of my personal experiences over a dozen years of studying this stuff, as well as exactly some of the strategies that you can use to build your Nomad Capitalist plan. Number 3, if you're not sure where to start, but you want to come and learn from my team and I, you want to come and mingle with like-minded people, learn more about our live conference, Nomad Capitalist Live. It's coming up soon. And number 4, if you want some help right now because you've got a burning issue, you need something solved, you want to lower your taxes, get a second passport, or build the Nomad Capitalist lifestyle of your dreams, go to nomadcapitalist.com and click on Become a Client.